Hey, Intro to Accounting, Mr. Roberts here, and today we're looking at lesson 5.4, Petty Cash, our last lesson in chapter 5. And we have a couple different concepts that we're introducing today, a whole new kind of reconciliation form. So let's get started because there's a lot to cover. The first learning objective we have is to establish a petty cash fund. What is it? Why do we need it? Next is to prepare a petty cash report, kind of a reconciliation report, and then replenish that petty cash fund after. So today is all about petty cash. And let's just take a look at the vocab here for petty cash. It says an amount of cash kept on hand and used for making small payments is called petty cash. Now, why do we have this fund? The reason why we have this fund is because we don't want to write a check every time we have some kind of small expense. We're not going to take out, we're not going to pay for some postage stamps and write a check every single time. So what we do is we establish a petty cash fund, and this is going to be used to make small purchases. Usually this petty cash fund is locked into a cash drawer somewhere or even like a box. And it's what you would go into when you need to make a small payment, and there's a specific amount of cash that's in there. For Mr. Delgado, we can look here and it'll say that the amount that Mr. Delgado feels comfortable with actually spending on any small purchase is about $20 in the petty cash fund. If it's more than $20, we're going to go ahead and write a check. But if it's under $20, we can take that out of the petty cash fund. So something that makes things a little bit easier. And this petty cash fund is an asset. And you can see here that it has a normal debit balance, just like any other asset that we're going to have. So this should look pretty familiar. And usually there's not a ton of money in this petty cash account, but it all just depends on the business that you have. When I worked for Walmart, and our accounting office had somewhere around like $250, I believe, in the petty cash fund. So if there was something that we had to pay that was small, accounting could take it out of the petty cash fund and then replenish it later. And Mr. Delgado is going to decide that he wants $100 in his petty cash fund. And only he can use the petty cash fund. Kind of makes sense. He's the only owner of the business. And it should only be for items up to $20. So the first thing that we need to do is we need to establish this petty cash fund. How do we do that? Well, we are going to increase that asset, okay? So a petty cash fund is an asset. We put in the date when we create the petty cash fund. Our account title now, we have a new account and it's petty cash. We put the account title petty cash and we debit it. It's an asset. We're increasing the petty cash fund. After that, how do we increase the petty cash fund? Well, we use cash for it, right? We're just exchanging one asset for another asset at this point. And not trying to get too far ahead, but this petty cash fund, unless we want to take it and never use it again, or we want to increase it, that's really all we need to do with that petty cash account. And you'll see what I'm saying, but we're only going to use one transaction for this petty cash. We establish it, and then we just kind of leave it, okay? What's the source document for this? It's going to be a check because we're writing a check for it, right? We're using cash. So there we go. That's how we establish our petty cash fund. Next, though, we're going to look at making payments from the petty cash fund with what we call a petty cash slip. So, what good would a petty cash fund be if we can't make payments with that money? So what we're going to use is a petty cash slip. And this is showing the purpose of the payment that we're making. Because we can't just go into that box and take out $20, give it to somebody for something, and just pretend like we'll remember what that is. So this is proof of what we spent that money on. So here you can see some of the items that are on there. We have the petty cash slip number, the date when we paid, who it was paid to. So this was to Dispatch. This was for a newspaper ad and it was $14. You can see that they're following the rules, that it's not supposed to be over $14 or over $20 for Mr. Delgado's business. And the account is going to be an advertising expense. And it was approved by Mr. Delgado. So when we complete this payment, because it's such a small amount, we do not write anything in the journal yet. We're going to wait until we write this advertising expense. So we'll see when we actually write that, when we write that in our journal. I'm going to kind of pass over this. It's just careers in accounting. There's a vocab word in here, an accounting clerk, processing routine details and accounting transactions. Just make sure you know that. I'm sure it'll show up somewhere. And what we have here is a petty cash report. And we are going to eventually need to refill our petty cash box, or we're going to get to the end of the month and we need to record the expenses that we have, right? Because we had that advertising expense, and let's say that was the only thing that came out of the petty cash box. If that was the only thing that came out, well, we still have enough cash in there, right? But because it's the end of the month, we need to make sure that we record our expenses for the end of that month. So for Mr. Delgado, when we're at the end of the month, we need to do this petty cash report here, which I'm about to look at, or if we get down to $25, then Mr. Delgado says, make sure you fill back up this petty cash box. And then you'd have to actually fill out a petty cash report before the end of the month. Those are the two ways that we can do this for different businesses that might be different, okay? And what we need to do is we need to go in and we need to prove that the cash is correct, okay, in the petty cash box. And then we need to record any expenses that we had that we paid out of that petty cash box. So you can see here we had miscellaneous expense and advertising expense. We're going to need to record that because it's at the end of the month. And then what we do is we physically go into that box and we count all the cash. And we see how much are we supposed to have in that box and how much do we really have in that box. That's what we're trying to determine here. And if people that work with cash know that sometimes cash disappears. Sometimes there's an extra dollar in there. Sometimes there's a dollar that's missing or a couple dollars that's missing. So we need to prove that petty cash fund and make sure that everything's accurate. So it says here, a proof of fund must be completed. It may be called the petty cash report, and it says Delgado Web Services prepares a petty cash report on January 31st when the actual cash in the fund is $66. So we'll kind of take a look at that right now. It says errors may be made when making payments from a petty cash fund. These errors cause differences between actual cash on hand and the record of the amount of cash that should be on hand. A petty cash on hand amount that is less than the recorded amount is called a cash short. Now, if you're a cashier, you'll probably understand this, that you get $200 in your till when you go ahead and then you do some transactions, and at the end of your shift, the boss prints something off and says, you should have $100 in this account, or $100 in this till. And you go ahead and you count it, and you only have $99.50. Well, what that is going to be considered a cash short, okay? And, that can happen with the petty cash box as well. Now, maybe you count everything out and you have $101 in there when you're only supposed to have 101. So if that's the case, it's going to be called a cash over because you have more cash in there than you're actually supposed to have. So it can go either way. Mostly with cash, we have cash shorts, right? Because that's just the more likely thing. We lose more cash than we just magically get more or forget to give somebody back the correct change. So we are going to prepare this report, and I'm going to walk through the steps. The first thing that we're going to do is put in the date and the custodian name. So here we're doing this report on January 31st, and the custodian or the person that's preparing this is Michael Delgado. It makes sense. Michael Delgado, it's his petty cash fund. He kind of runs the thing, right? And for number 2, we put in what the fund total is. Now, this is going to be different for different businesses, but this is the number that we start out with, okay? So the petty cash fund, Michael Delgado said, I want that to be $100 in there when it starts out. So here it starts out at $100. We put that in this little column here. For number 3, we mark down payments by their general ledger accounts. So we go into that box and we pull out 2 memos, and it says, ooh, here's a miscellaneous expense and here's an advertising expense. And then we write down what we actually paid for out of that petty cash fund. So here we had a miscellaneous expense and an advertising expense. And what are we going to do? We're going to add those up. So we can see that 20 plus 14 is going to equal 34. If we go down and we look at step number 4, you can see that we have the total payments. Well, what's the total payments that we paid for this month? It's going to be $20 and $14, so it's $34. Now we go into our replenishment amount, which is over here on the far right column. So this is what we're supposed to replenish. What are we supposed to put back in so we can get to the $100? And based on what we paid, we need to replenish $34. But, well, I won't say but yet. So you can see here, it shows the reconciliation less total payments, which means we're going to subtract the payments we had. And that's going to equal the recorded amount on hand. Now you can see that it says recorded. This is what's supposed to be on hand. We just take that from what the account started with minus the payments. So we should have $66. At this point, we go in there and we count the actual money. How much do we actually have on hand? Because we're going to write that out in the next spot. Well, the actual amount on hand is 65. So do we have more money or less money than we're supposed to? Well, we have $1 less than we're supposed to. We lost $1 in the petty cash fund. So what do? We subtract the recorded amount on hand, or we find the difference actually, because it could be positive. So we find the difference between the recorded amount on hand and the actual amount on hand. And here we have a cash shortage of $1. So what do we need to do to get this fund back to 100? We actually, because it's cash short, we need to put $1 over here on the right-hand side. Do we need to put $1 more or $1 less in there? Well, we need to put $1 more because we're missing $1. So it's 34 plus 1 equals $35 to replenish our petty cash fund. Now, if this was over, this would be in parentheses. And over here, we'd actually have to put $1 less in, right? Because we had $1 additional dollar. So that's our cash short and cash over and our petty cash report. And just like all the other, writing out a check and the bank statement reconciliation might look like a lot of information right now, but once we start doing it and get a little repetition in, it becomes easier. So now we're replenishing this petty cash, right? We're doing the same thing. And to actually replenish it, we need to record it in the general journal. So what do we do for this? And this is going to be the first time in the general journal that we have a transaction that's going to look like this, okay? And you can see here that there's 3 different accounts, and then cash is going to total up to all of them, which is a little bit weird, right? So when we look at this, we have miscellaneous expense, or let's start at the beginning, I'm sorry. The first, we put in the date, okay? So the 31st. Next, we're going to write in all of the expenses or things that we paid for out of this account. So we have our miscellaneous expense and our advertising expense. And they're expenses. They need to increase. We need to increase these expenses. What do? We debit them. So we debit miscellaneous expense and advertising expense. When we go down to the bottom here, we can see the cash short and over. And it says petty cash short and petty cash over are recorded in an account titled cash short and over. Cash short and over is debited when cash is short and credited when cash is over. It says, therefore, the balance of cash short and over can be either a debit or a credit. Okay? Now, this is one of those accounts where there is a normal balance on the debit side, but cash short and over could either be a debit or a credit balance. That's a little bit weird, right? Because cash can only be a debit balance, We can credit cash, but the balance will always be a debit because we're not going to have negative cash. Cash short and over is weird because the balance can be either a debit or a credit. So this account could cause us some troubles in the future when we start posting to the ledger and figuring out our balances. But just keep this in your mind. Cash short and over, sometimes it can be a little troublesome. Pull this up in the book. Look at your cash short. Look at your cash over. How it's going to be affected. So here, did we have a cash short or over? Well, we had a cash short. When we have a cash short, we debit it. So we're going to debit cash short and over here. And what do we have to do then? Well, we have all these debits here on the left-hand side, right? And how are we actually paying for them? Well, we're paying for all of these with cash. That's what we're doing. Even the cash short and over, because we lost $1, we're making up for it with $1 extra of our cash. So here we have 20, 14 plus 1. So the cash that we have that we need to credit is $35. And then we have our source document here, which is going to be C11, okay? Because we're going to write a check, and that's going to be C11. So that's how we're going to journalize our petty cash report. Once again, you do it a couple times, it becomes a little bit easier. And just like I said in the beginning, unless the petty cash fund is permanently increased or decreased, the balance of the account is always the original amount of the fund. So that means, do you see petty cash here at all? No, you don't. And petty cash is, once we establish that fund, it just stays the same, okay? Unless Mr. Delgado says, you know what, I don't want $100 in there, I want $200. Well, then petty cash will be affected. But when we just go ahead and we reconcile, petty cash is nowhere to be found here, right? We're working within the petty cash fund, but we don't journalize anything with it. Right? And that is 5-4. A lot of new topics, a lot of new things, but let's practice and jump into the work together. All right, so here we are on the working papers. So when I open up 5-4 work together before, I accidentally hit submit on one of the things, and now I can't reset it. So we're going to do the 5-4 on your own, and then you can do the work together. So let's jump in there, and you can see that we're going to prepare a petty cash report. So just prepare a petty cash report for April 30th of the current year using the following information. Amount in fund is $250. Petty cash slip supported payments of $48 for delivery expense, $30 for miscellaneous, and the actual amount of cash in the petty cash box is $171. Enter student signature in cells where you would enter the custodian's signature. Let me just copy student signature. I'll put that in there right now, and we'll also put in the date, which is April 30th, the end of the month. When we look at the reconciliation amount, the amount that we need to bring the petty cash fund to is $250. It looks like we had a couple payments here, and it was for delivery expense and miscellaneous expense. And it was $48 and $30. Let's bring out a calculator real quick so we can do the rest of this problem. Oh, that's weird. Just shows like a weird thing up there. Here we go. I guess I'll put it right over that. Alrighty. Just a little bit more. Alright. So if we look at this, let's just go 48 plus 30, and we had 78, okay? So 78 would be the total amount of payment, or it would be the total payments that we had, because we had delivery expense and miscellaneous expense. So what's the replenishment amount that we have here? Well, we just carry that over, and essentially we're supposed to have $78 to replenish this back to $250. So the recorded amount on hand, and when it says recorded amount, it just means by paperwork, right? So the paperwork says that we should have $250 minus 78, $172 on hand. Okay. But what's our actual amount on hand? Well, our actual amount of cash in the petty cash box is $171. So what does that mean? It means that we are short by $1. We are short by $1. We lost that dollar somewhere. So we actually have a cash short of $1 here, and we'll bring that over to the right-hand side. So if we're short $1, do we need one more dollar to bring it to $2.50, or do we need one less dollar? Well, if we're short it, we need one more, okay? So here, we now need $79 to bring our account back to $2.50. So let's grade step 1, and there we go. Now, if you look here, and this was over, you would actually subtract that, right? Because you'd have one additional dollar in there. So it'd be 78 minus 1, and it'd be $77 that you need to replenish that account. I think that'll come up in your application problem, to be honest. So now we need to journalize these transactions. It says journalize the transactions related to petty cash completed during April of the current year. Use page 8 of the journal. The abbreviation for check is C. All right, a lot of stuff. So the first thing that we have here is looks like we're establishing a petty cash fund. So let's put in petty cash fund because that's our account. And it's just going to be petty cash if we look in the chart of accounts. And then from here, what's actually going to happen? Well, petty cash is a debit balance, a normal debit balance. We need to increase it. And we're going to increase this by $250. Well, how do we pay for the petty cash fund? Ironically enough, with cash, right? So $250. Then what's our document number? It's going to be check 228. And maybe you're looking at this and you're going, oh, there's only one more transaction and there's 4 lines. What's going on here? Well, this is where we are going to record all the things we paid for out of that petty cash fund. So we're going to need our petty cash report for this. I'll put in the date because it's going to be the 30th. If I look at this, we have a couple different things. We have delivery expense, miscellaneous expense, and we're going to have to pay for this cash short and over. So let's put in delivery expense first. And expenses have a normal debit balance. So we're going to debit these accounts. Delivery expense, miscellaneous expense. Then the last one is going to be cash short. And let's see how they name it. Cash short and over, right? Cash short and over. There we go. And how much is this going to be? Well, it's going to be $1. And the question is, do I debit this or do I credit it? Well, when it's short, we debit it. When it's over, we credit it. So here it's short, right? Because we counted that cash and it's short $1. And there we go. Now, we're going to need the account that we're paying for all these things, or how to replenish our petty cash fund. Where are we doing that with? Because we've already set it up. Now we're paying these different things. The delivery expense, miscellaneous, cash short and over, and we're paying it with cash because that's what's in the petty cash fund. So we add all these up, and it is going to be, let's see here, 48 plus 30 plus 1 is 79. And you can see that's the same that we replenished it. All right, so the document number for this is going to be C253, because we're going to pay a check for it. That's what it comes down to. We're going to use a check for it. And there we go. Let's grade this final step. And we got a 3 out of 3 on it. We are good to go. If we go back into here, remember this was the on your own. I mistakenly already graded this one. So the on your own, we got a 5 out of 5 on that. We are good to go. Now, remember, when you get into the application, things might look a little bit different, and you might have to work through it, right? Because there's a possibility that we might have a cash overage, right? So what do you do then? So think about that, okay? Because the replenishment amount that you have, and when you have $1 extra in there, well, you would need $1 extra to replenish it, right? And then when you journalize your transaction, it wouldn't be a debit, it'd be a credit. So just keep that in mind so you know kind of what you're doing when it comes to reconciling and proving this petty cash report. If you have any questions, please let me know. This can be a little bit complicated, but refer to your book and you'll do just fine. All right, thanks.